Everyone keeps asking the same question, though few dare to say it aloud. When will the market finally fall? For years, analysts have warned of debt spiraling out of control, of valuations reaching absurd heights of cracks, forming beneath the glossy surface of prosperity. And yet the charts keep climbing. The headlines keep celebrating. Retirement accounts look healthier on paper, even as the real world feels weaker by the day. It's a paradox so complete that people have stopped questioning it, afraid that by asking they might see what they're not supposed to. But beneath the calm rhythm of stock tickers, something darker hums an invisible pulse of control. It's not luck holding this fragile tower upright, nor is it faith or innovation. It's precision, a design. The market doesn't float because it's strong. It floats because it's being held there. And if that's true, then someone somewhere must be deciding when to let it go. So perhaps the better question isn't when the market will crash, but who will decide when it does. Because in a world where everything seems random, the one constant truth is power. And power never leaves anything to chance. The truth is simple but unsettling. The system isn't broken. It's working exactly as it was designed, just not for you. For decades, the story has been told that the market is an open arena where opportunity meets ambition, and anyone can win with enough effort. But behind the glowing screens and optimistic headlines lies a structure built to channel wealth in one direction, upward. Every morning, millions of ordinary investors refresh their portfolios, hoping their savings will grow, hoping they'll retire before the next downturn erases everything.
This downturn is unacceptable, Minister.
Meanwhile, far above them, a smaller circle of players
and your
isn't
solutions
hoping.
only
They're
tighten
planning.
the grip of those above
They've
us.
built a game where risk is redistributed, losses are socialized, and profits are privatized. What you see as a market, they see as machinery, a system fine-tuned to extract, not create. It's not conspiracy, it's coordination. Policies are written not in secrecy, but in daylight, dressed as economic rescue. Regulations are shaped to protect stability, but stability for whom? The system's elegance lies in its transparency. It hides in plain sight, so obvious that most people can't believe it's deliberate. And the mechanism that keeps this illusion alive, the one that transformed the financial world into a perpetual motion machine of debt and reward, has a name that sounds harmless, even dull: quantitative easing. It's the most boring phrase you'll ever hear, until you understand what it really does. Quantitative easing, a term that sounds sterile, academic, almost medicinal, as if it were a remedy for troubled times. But in truth, it's the most sophisticated wealth transfer operation ever conceived. Imagine a game where the winners already know the rules before it starts, where the timing of every move is whispered to them in advance. That's what happens when the Federal Reserve announces it will buy government bonds. It's not a surprise. It's a schedule, a signal that tells the largest
So
banks
Blackbeard
exactly
and his crew
when
would
and
sail
what to
right
buy.
through here,
Here's how the
near the
quiet heist
Caribbean,
unfolds.
looking for
The Fed
treasure
declares it
ships
will
coming
purchase
from the New
billions in
World.
Treasury bonds next month. Immediately, banks sweep in, buying those same bonds at today's lower prices. Then right on cue, the Fed enters as the buyer of last resort, flooding demand, raising prices and handing guaranteed profit to the banks. No risk, no competition, no uncertainty. What would be called insider trading in any other context becomes monetary policy when done by the government. And the beauty of it all, it's sold as salvation. You're told this is stimulus for struggling families, for small businesses, for the economy itself. But the money never reaches your street. It flows instead into financial markets, into assets, into speculation, into the hands of those who already own the future. The top few percent gain trillions in paper wealth, while the rest watch prices rise and purchasing power fall. Every promise of prosperity turns into another mechanism of extraction. Every rescue plan becomes a ransom note written in the fine print of inflation. And through it all, the system smiles, because the greatest trick it ever pulled was convincing you that printing money makes everyone richer, when in truth it only fattens the walls of the vaults you'll never see. What began as an emergency measure has become the blueprint for a new kind of economy, one that rewards those closest to the printing press and punishes those furthest away. When the Fed injects money into the system, it doesn't rain evenly.
It just goes sideways
cascades
from
downward, touching Wall Street first
I
and
know.
Main Street
I'm
last,
tired of
by
this
which time the
plateau.
purchasing
Are we
power
ever
has
going
already
down?
evaporated. Asset prices soar, stocks, real estate, luxury portfolios, while wages crawl and savings accounts wither under near zero interest rates. The pattern is ruthless in its simplicity. Those who own assets watch their wealth multiply. Those who rent or save see their dreams shrink with every headline of record highs. Cheap loans are handed to the credit-worthy, the same individuals and corporations who already own appreciating assets. They borrow against what they have to buy, more of what you can't. The system isn't malfunctioning, it's functioning perfectly. It's architectural, a cathedral of inequality built brick by policy brick. And as it stands taller, its shadow grows longer. The middle class, once the backbone of stability, is quietly hollowed out, replaced by an illusion of prosperity, measured in stock indexes and GDP figures that have nothing to do with lived reality. Corporate profits swell small businesses, drown in red tape, and headlines celebrate growth that most people never feel. But here's the cruel genius of it. Every time someone starts to question the imbalance, the system has a safety valve: volatility. A brief storm that shakes the weak hands, resets
Confidence
expectations,
restored.
and convinces the masses that chaos is natural, that
Yes,
crashes
Professor,
are
it's a
just part of the
perfectly closed
game.
system, immune to
Yet
external
behind every
volatility.
crash
Provided the
lies
base assumption
choreography.
holds true, naturally.
Behind every
Good
rebound
evening.
intention.
Tonight we examine the
illusion
implications of the
free markets is
recent
preserved
seismic
because it
shifts
must
in
be
the global
without it, the
economy.
architecture
The
would
future
collapse under
hangs
its
in
own
the
truth.
balance.
History doesn't just rhyme, it recycles. Each so-called crisis plays like an old song with new lyrics, and the chorus is always the same. The wealthy emerge richer, the rest are told to rebuild. Take the year 2000, when the dot-com bubble burst. Ordinary investors, mesmerized by dreams of a digital revolution, were left holding worthless shares. But the insiders, they had already cashed out, leaving ashes
Get
for
your
others to
analysis
sift
here.
through.
The
The
purest
stage
truth in
was
the
cleared,
land.
and from
Finest
those
silks,
ashes rose
finest
the tech
spices. Right
empires
this
that
way.
now dominate
Exchange
the
your
world.
coins for
Then came
wisdom.
2008, the great financial crisis. Subprime mortgages and reckless speculation were the villains on paper, but behind the scenes, the real story was cleaner, colder banks packaging toxic assets, selling them to pension funds, then betting against their own creations. When it all imploded, taxpayers footed the bill. Too big to fail became too big to jail, and once again, those who caused the fire were paid to rebuild the house. Fast forward to 2020. A pandemic sweeps the globe, a perfect alibi for the largest wealth transfer in modern history. Small businesses, shuttered families clung to stimulus checks that barely covered the rent, while trillions were funneled upward through corporate bailouts and asset inflation. The market crashed for a blink long enough to terrify the weak, then soared higher than ever before. Billionaires gained $1 trillion in the time it took the average family to lose its savings. These events aren't random. They're scripted resets, controlled demolitions designed to purge the excess while protecting the core. Every collapse functions as a cleansing ritual, removing competition, tightening control, consolidating power. The pattern is too consistent to be coincidence, the timing too precise to be fate. And if you look closely, you'll see the next act being rehearsed already. The question isn't whether another crash will come. It's who's writing the script this time, and what role you've been unknowingly cast to play. Beneath the glowing screens of the stock exchange, beneath the illusion of supply and demand, lies another world, silent, instantaneous, and unseen. It's a market within the market where trades happen faster than thought and where algorithms, not humans, rule. This is the realm of high-frequency trading and dark pools, a digital underworld where speed replaces insight and secrecy replaces trust. In these shadow networks, machines execute thousands of trades per second, buying and selling in micro-moments invisible to the human eye. They don't invest in companies or ideas or progress.
crash won't happen
They extract
by accident.
fractions of pennies millions of
It will
times a day
happen
from every
by
transaction
design.
you and I make. It's a quiet tax on participation, a profit built not on value, but on velocity. Dark pools, meanwhile, are the private arenas where the powerful trade in silence.
This Gilded
Over
Age,
50
as
of
they
them
called it,
operate
was
across
built
the
on an
United
illusion.
States, processing
The ticker
nearly
tape
half
promised
of
endless
all
wealth,
equity
but the
transactions.
foundation was
Their
already
massive
crumbling.
trades are placed without ever touching the public market, shielding true prices and intentions. To the outside world, the market looks calm, transparent, efficient. But behind the curtain, titans move unseen, adjusting prices and strategies in rooms without light. For the average investor, it's like playing chess blindfolded while your opponent sees the entire board. Every buy and sell order you place becomes a data point for someone else's advantage. Algorithms read your moves, anticipate your fear, and profit from your hesitation. And yet this isn't called manipulation. It's called innovation, efficiency, progress. The narrative is carefully managed so that the machinery of extraction looks like the future of finance. But make no mistake, this is not evolution, it's enclosure. The digital fences have gone up, and what was once a market for all has become a machine for a few. The public thinks they're inside the casino, but the truth is they're part of the scenery. In March 2023, a quiet panic rippled through the financial world. Silicon Valley Bank, one of the favored vaults for venture capital and tech startups, collapsed seemingly overnight. On paper, it was a failure like any other poor risk management, bad bets, and rising interest rates. But the response revealed something deeper, something unmistakable. Within hours, the federal government stepped in, guaranteeing every deposit, even those far above the legal insurance limit. No debate, no hesitation. The message was unmistakable: if you're inside the right network, the rules don't apply. For years, smaller community banks have fallen without fanfare. Their depositors receive the standard payouts and move on, forgotten by the headlines. But this time, when a bank tied to the arteries of Silicon Valley began to bleed, the whole system mobilized to stop it. Not for the economy's sake, but for theirs. Because when one node of the elite web trembles, the tremor is felt across every boardroom and policy office that depends on it. The crisis wasn't just about insolvency, it was about exposure. Banks across the country were sitting on mountains of unrealized losses, long-term bonds that had collapsed in value as interest rates soared. By the numbers, many were technically bankrupt, yet the market barely blinked. Everyone knew the playbook: the losses would be papered over, reclassified, or quietly transferred
counting
to
the
public
assets,
balance sheet.
tallying the
Wouldn't
gains.
stop. It would simply be
1.5
renamed.
billion.
This is why the crash hasn't
2.7
come.
billion.
Because the system no longer obeys the laws of risk and consequence. It bends reality for those too important to fail, rewrites math for those too connected to lose. When the value of assets drops, they're revalued. When banks face ruin, they're rescued. When markets shake, they're stabilized. What once was capitalism has become choreography, a managed theater of outcomes where profit is privatized and failure is forbidden. The illusion of fairness endures because it must. The machine hums on buying itself more time while the rest of the world waits for gravity to
You betrayed us, you
The
snake!
markets haven't
I should have
survived
known
because
better.
they're strong.
Elias, enough
They've
of this
survived because
madness.
they're
I
being
did
kept
what I had
alive,
to
a
do.
patient sustained
You
by
left me no
machines,
choice.
tubes, and constant injections of money and faith. Every law of economics has been rewritten to maintain the illusion of balance. When debt balloons beyond reason, it's labeled stimulus. When inflation erodes savings, it's called growth. When reality threatens to intrude,
The
the rules
returns this
change
quarter
again.
are simply
The Federal Reserve
splendid.
can conjure trillions from nothing,
Another
buying
12
assets
hours
to
for
prevent the
barely
truth from
enough
surfacing.
to eat.
The Treasury can guarantee any liability, shifting private losses onto public shoulders. Regulators can simply redefine what safe means. Each intervention creates the illusion of stability while quietly draining the system's last reserves of honesty. The result is a strange new world where prices no longer reflect value, they reflect policy. A world where stocks rise not because companies innovate, but because intervention demands it. Where markets no longer predict the economy, they dictate it. Beneath the calm surface of steady indices lies a chasm between reality and representation so wide that no bridge of faith can truly span it. Fund managers know it. Economists whisper it. Even the architects of the system feel the strain. But no one dares to pull the plug, because the entire structure now depends on the illusion that it can't fail, that if everyone just keeps pretending, the patient will keep breathing. And so the performance continues. Charts move, headlines celebrate, and investors cheer, mistaking the pulse of the machines for the heartbeat of a living market. But deep down, even the faithful can sense the truth. What's being preserved isn't prosperity, it's control. And control, once absolute, doesn't need freedom to survive, only belief. The machine still hums, but the sound has changed. It's no longer the rhythm of progress. It's the mechanical whisper of something that refuses to die. If the economy is a machine, then politics is the hand that decides when to turn the switch. Crashes don't strike at random. They arrive
at the
on
green
cue,
ones, they're
aligned with
stabilizing.
cycles
But
of
the red
power,
is spreading.
distraction, and
I can't
control.
look.
Look back, and you'll see the
It
choreography
has to
clearly.
turn around.
The crash of 2008 erupted in an election year, creating a perfect storm of fear and urgency, a convenient excuse for bailouts that reshaped the financial order under the banner of rescue. In 2020, history repeated itself with eerie precision.
The market is
A global
collapsing.
pandemic
Get
brought
me out of those
economies to their
positions
knees,
immediately.
but the collapse
It's a
unlocked
bloodbath.
something greater: political authority on a scale no one would have accepted under normal conditions. Emergency powers became policy, restrictions became precedents, and money once limited by restraint became limitless under the justification of survival. Every crisis opens a door that would otherwise remain locked. Laws get rewritten, power consolidates, public anger is redirected toward abstract enemies, a virus, a market, a scapegoat, while the true architects quietly rearrange the foundation of the system. Timing is everything. A crash too early risks backlash. Too late, and
Another
control
bailout
slips
for the
away.
banks.
But at just the right moment, chaos becomes useful, a cleansing storm that resets the
Where does
rules
that
and
leave us,
renews
John?
authority. That's why the next crash will not come from randomness. It will come from strategy. When the imbalance grows unbearable, when the numbers no longer
Breaking
align
news
with
this
the
hour,
narrative,
global
when
markets are
sustaining
in
the
free
illusion
fall as the
costs more than
crisis
breaking
deepens.
it. That's when the
Experts are
curtain will
warning
fall.
of a total
And when it
collapse.
does, the very
To the
ones who triggered
recovery.
it will be waiting on
Indeed.
the other side, ready to
The
buy the ashes and
restructuring was
call it
long
opportunity.
overdue.
Elections will change faces, but not direction. Policies will shift tone, but not purpose. Because this isn't about ideology, it's about rhythm. The rhythm of collapse and consolidation. The art of letting things burn just long enough to rebuild them stronger, safer, and more obedient. By now, even those inside the system understand that it's unsustainable.
Each crash
The numbers don't
clears
add
the
up, the
field
fundamentals
for the
don't
next
hold, and the
empire.
promises ring hollow. But there's a cruel gravity at work, one that pulls everyone willingly or not into compliance. Fund managers, pension administrators, even cautious bankers, they all see the rot beneath the surface. Yet none of them dare to step away. Because in this game, refusing to play means instant defeat. A manager who questions the system's integrity is punished for underperformance. A pension fund that avoids inflated assets loses to competitors chasing easy returns. Insurance companies that price risk honestly are outbid by those willing to pretend. The result is a collective delusion enforced not by law, but by survival instinct. Everyone must keep dancing because the music never stops, not for them. This is the participation trap, a self-reinforcing cycle where every rational actor becomes complicit. You can't win without joining, but joining guarantees your eventual loss. The architects of the machine know this. They've studied human psychology long enough to understand that the surest way to maintain control isn't through fear, it's through dependence. And so professionals who once served the market now serve its illusion. They know it's fragile, but they cling to it, hoping to extract just enough wealth, just enough safety before the reckoning arrives. It's not greed that drives them anymore, it's exhaustion. A quiet resignation that whispers, maybe if I just keep going, I'll make it out before it falls. But no one truly gets out. Because participation isn't just encouraged, it's required. And every new player, every dollar invested, every ounce of faith poured into the system becomes one more
Final
line of
offer
code
is
in the
40
program
million.
that keeps
Take
it
it
alive.
or we walk.
The machine doesn't ask for your belief. It only asks that you
We have
never
a deal.
stop feeding it. The most powerful machinery of all isn't financial, it's psychological. What keeps the system alive isn't liquidity or leverage, but belief. Every day, headlines sing the same lullaby: markets are resilient, policy is working, recovery is near. The narrative is repeated so often that it becomes indistinguishable from truth. Financial media plays the role of storyteller, framing manipulation as management and intervention as wisdom. Their job isn't to inform, it's to reassure. Academia joins the chorus, crafting theories that justify the impossible. Economists funded by the very institutions they claim to analyze produce elegant equations that make moral corruption sound like innovation. And politicians, regardless of party, maintain the theater of conflict, arguing on camera while signing the same policies behind closed doors. Each plays their part in a performance designed to maintain one illusion above all: that the market is free, that opportunity is equal, and that you are still a participant rather than a product. Even dissent is commodified. Voices that challenge the narrative are absorbed, branded
Gentlemen,
as entertainment
I
stripped of
believe
danger.
we have reached a mutually
Outrage
beneficial
becomes
accord.
content.
Indeed.
Rebellion
This
becomes
secures
a
the
hashtag.
future of the
And
syndicate.
truth, if it appears at all, is drowned beneath the noise. In this architecture of managed consent, reality bends not through censorship, but through saturation. You are never forbidden from knowing the truth. You are simply buried beneath too many versions of it. And so the public remains trapped in a hall of mirrors, reflecting confidence back at itself. Analysts study numbers that no longer measure anything real. Journalists repeat statistics they don't understand, and citizens build their lives on prices that were never meant to represent value. It's not ignorance, it's exhaustion. A fatigue so deep that illusion feels safer than awareness. Because if the market isn't real, then everything built upon it might not be either. And that's a truth few are ready to face. So when will it finally collapse? When will the illusion end and the truth step into the light? The answer is both simple and terrifying. The crash will come not when the system fails, but when breaking it becomes more profitable than keeping it alive. Until then, the game continues. The markets rise and fall on cue, narratives shift like tides, and every tremor is framed as progress. But somewhere in the shadows, those who built the machine are watching the pressure gauges climb. They know the structure can't hold forever, that every manipulated cycle buys a little more time, but at a cost that compounds beyond imagination. When the crash comes, it won't look like chaos. It will look like control. The timing will be perfect, the explanation
Final
ready,
offer
the
is
blame
40 million.
pre-assigned.
Take it,
Politicians
or we
will
walk.
speak of unforeseen shocks. Economists will call it
We have
correction.
a deal.
The headlines will mourn the loss of confidence. But for a select few, it will be a harvest. They'll buy the ashes before the smoke clears, turning destruction into opportunity once more. The rest will watch their savings evaporate, their homes lose value, their futures rewritten overnight, and they'll be told it was inevitable. Yet it was never inevitable. It was orchestrated. The system didn't collapse because it was weak. It collapsed because it was time. Because in this grand cycle of creation and erasure, control demands renewal. The tragedy is not that most people won't see it coming, it's that they already sense it deep down. They feel the tension in prices that make no sense, in jobs that pay less than survival, in debts that can never be repaid. The truth has been whispering for years, but comfort is louder. And so the story repeats again and again. When the final curtain falls, the connected will rise from the ruins, holding ownership of what remains. The rest will call it disaster. They will call it opportunity. The question is not whether the crash will come, it's whether you'll still be asleep when it does.